In this video, let's discuss how to trade meme coins and altcoins in 3 different types of scenarios. Bull markets where everybody's buying, bear markets where everybody's selling, and markets that are holding patterns. Things aren't going up so much, things aren't going down so much. What happens in bull markets? Everything just about goes up. You think, I bought this poop coin. It went up. It went up. Yes, but did it go up relative to its peers or other cryptocurrencies more or less? So that's certainly a question you want to ask first. But if something is going up, a lifting tide, there's a saying, lifts all boats. And so you ride that. But always objectively examine your investment, because if it is going up slower than the rest of the market, of course, meme coins will typically go up faster than Bitcoin because Bitcoin is expensive. But for a meme coin, if it's worth like 1/10 of a penny, to double is very easy. So percentage-wise, meme coins will go up higher and faster. So measure them compared to their peers. So if they're doing better than their peers, great. If they are doing average, say similar to their peers or slightly underperforming, that's an area of concern, because as soon as the bull market ends, your meme coin that's underperforming, still going up during the bull market but underperforming overall, will drop faster and you'll end up kind of losing money if you don't sell. So on the way up, the more it goes up, the more you take profits, the more you shave off a little bit of what you're holding. You're never going to nail the peak. That's an illusion. That's a false hope. What you want to do is lock in profits. So that's what you want to do in bull markets. How long do bull markets last? I don't know. 2 weeks to a year. Historically, the range has been very large. So slowly take profits. During bear markets, you do not want to be in meme coins. When things are going down, meme coins go down faster than most other assets very often. So you want to get out, get into cash. How do you deploy that cash? When the drop seems to end and you get into this holding pattern where it's a little bit up, a little bit down, but there's no significant upward trend or downward trend, you think, what are the next catalysts? Next catalysts may be economic changes, bad economy, good economy, presidential changes. Obviously, you see in the United States, one president under Biden, cryptocurrencies were kind of held down artificially. Under Trump, cryptocurrencies are supported, and so they've gone up accordingly. So you can look at the big picture elements and think to yourself, if there isn't anything coming around, which is, by the way, almost impossible to predict accurately, but you want to think about it. But if you don't see anything and there's a holding pattern, little down, little up, you want to look at the range that some cryptocurrencies are trading under. Maybe some meme coin is trading between 50 cents or 75 cents. Okay. You watch it. When it kind of goes down to around the 50th cent mark, maybe you take a little risk, you buy a little. Maybe if it goes down to just touches the 50 cents, you buy a little more. If it goes down like 47 cents, you buy a little more. If it goes down to like 45, you buy a little more. Provided that you still think it's not totally dead, right? It's not just going down or forever down. But if it's been oscillating, if it's not a one-day fad, if it's been oscillating, okay, you hold it, you bought at a bunch of low points, and then you wait. You bought at 50, maybe 2, 50, 49, 47, 45. And then you kind of wait. Some good news happens. Some other good news happens, not specifically directly related to the cryptocurrency you're holding, but something else related in the cryptocurrency world that's adjacent. And then suddenly everything goes up a little bit. And, your cryptocurrency went up to 60 cents. Sell a little. Then maybe another day of good news, 63 cents. Sell a little more. Slowly sell up to like 70 cents. Never going to touch the 75, right? It's really hard. Sell. And then you kind of wait. And in a few weeks, there's going to be a drop. Great. Now you made about however much you made, maybe 20% profit, maybe 10% profit, maybe 30% profit. You put it back. You put more money back into that cryptocurrency and you start trading again. And suddenly you're kind of trading a range So you can make money when cryptocurrencies are in a holding pattern. In fact, it's a little easier even because there's no crazy stress of if it's going down and you're holding it, that's really stressful, hard decision to make. That decision is tough. If it's going up, that decision to sell is really hard. But a decision to trade a middling market, a market that's oscillating in the range, actually is pretty comfortable psychologically, believe it or not. It doesn't feel like that's natural, but it's the easiest mentally. There's no anxiety. Oh, it's gonna run away. It's just trading in the range, and you can kind of predict the range. Not always, but you can sort of tell. Let's say there's like a period of just stability, no growth, no decline. You can see, oh, it went 30% higher 1 month, then it dipped 30% lower. So there's like 50% approximately oscillation. And pretty good range to trade. And so you trade that, and that's how you handle, generally speaking, all these markets: bull markets, bear markets, and markets that are in a holding pattern. Of course, this is a complex field, rapidly evolving field. Things can change any day. One day some meme coin might become popular, one day not so much. And so you very much want to be on top of your investments. This is not, oh, I'm going to just put it away like a stock, check on it in a year. This is not that universe. If you're going to invest in meme coins, you have to be like in it. It's because you want to be one of the first to react, because things move really rapidly. If you react a day after some news came out, you're late. You're late by 20 or 25 or 30% or something more. So you want to be really on top. If you can't be on top, you want to make longer term investments. Maybe meme coins aren't exactly the thing. You want to look into other alternative altcoins that have better fundamentals that you can leave for the longer term and check back in a year and be like, wow, 1,000%, thank you so much. Or less than that would also be good. So that's how you trade these different markets. And one thing that's really great and an investor's dream in smaller altcoins, meme coins, is the potential for that 1,000% spike, 10,000% spike. It's possible, but as investors, we often have a shared experience that, frustratingly, we only learn about it after the fact. Other people profit from the spike, somehow learn about it early, and then we learn about it. Oh yeah, look at that cryptocurrency, it spiked, but we missed out on it. This is the common experience where people don't actually know which cryptocurrencies are going to spike. So I want to introduce you to a cryptocurrency that I recently launched that has been growing steadily, and I'm rolling out a lot of promotional materials for it, and it's going to get a lot of publicity soon. At least I'm working on that. I'm an experienced marketer. But now it's still early. It's my SPRK, Spark cryptocurrency that I launched specifically with the aim of helping creators and entrepreneurs raise money. Think of it as Kickstarter or Patreon, but with cryptocurrency, and taking advantage of many of the benefits of cryptocurrency. You can learn more about this project on sprktoken.com, which I'm showing you on the screen now, to learn about the many real-world benefits and utilities of this cryptocurrency. And what I want to show you now are some charts and price projections for this cryptocurrency based on calculations of ChatGPT. So this is not speculative information from me. These charts are going to come from ChatGPT. What does come from me is the actual growth and the ability to attract investors long term. But luckily, I'm a top 1% marketer online, having reached 1 million students on Udemy, and having large and engaged communities on other platforms as well. So I have exactly the right kind of background to grow a digital asset. So with that in mind, let me show you the actual price projection of this cryptocurrency so that you can see whether you might be interested in making an investment in it at this early stage at which it can still grow 1,000 or more %, which is not a guarantee, but a reasonable bet to make considering the risk reward. You might put in $20 or $25 or $50. That's almost nothing to risk. But if the reward is 100x or 1,000x, as you'll see from the price projections coming up, that makes it a great bet to take. And if you're interested in investing in this cryptocurrency, in the description of this video, I'll have a link to another video which shows exactly how to invest in this cryptocurrency. So let's look at the SPRK token growth path as it goes from a tenth of a penny in price to, as you can see here, $1,000 per token and beyond. Yes, it's possible. So let me explain how it's possible and what is the underlying mechanism so that you understand how it works. The way such tokens work is that the organization that minted this token provides the liquidity for trading. In this case, there are 10 million tokens available for trading. That's what you see referenced here on the bottom left. You see 10 million on the bottom left on the x-axis, on the bottom axis. Then as 5 million tokens are left, 3 million, 2 million, the price goes up because supply of tokens decrease, the price per token increases. So you can see that while there are still about 10 million outstanding tokens out there, and the liquidity pool at the launch of this token was exactly 10 million tokens. So at that point, it's a tenth of a penny. But as people buy up, you see here, even up to 5 million tokens, which by the way is not hard to do because it's a tenth of a penny here. So with just $1, you can buy 1,000 tokens. So it's pretty easy to sell the first 5 million tokens, after which the price is still under a penny, but almost 10x from the initial launch price. So if you invest early in this, you get incredibly disproportionate results because even though this line looks linear, it's only because of how the line looks. The actual price growth is incredibly exponential because you see that after 5 million tokens are purchased, then after about 3 million tokens are purchased, here we are at the 1 penny per token price point, which is 10x of where it launched. Then as people keep on buying more tokens at 1 million remaining tokens in the liquidity pool, the price becomes approximately 50 cents. So now you went from a tenth of a penny to 50 cents. That's an incredible return, but that's only the beginning. After this inflection point, the price appreciation increases dramatically because the journey from having 10 million tokens outstanding to 500,000 tokens outstanding is not a difficult journey, but you see it starts getting close to $1. And as you get closer to 100,000 tokens remaining in the liquidity pool, you start reaching the $50 price point. And as people buy up more tokens, obviously it's harder to buy them now because they're more expensive, the price increases. So the real exponential chart looks like this. You see, it's relatively slow growth, but if you want to get to a hockey stick, the moment until which you wait is when you have under 1,000 tokens remaining in the liquidity pool, and especially under 100, it really takes off. Now, at this point, it's really hard to sell a token because obviously a token is going to be worth 200,000, so it's not realistic. But to get here, it is realistic. That path is not difficult because at the moment of filming this video, as you can see the price growth here, there's only slightly over 9 million tokens remaining in the liquidity pool because some people bought early. And you can see that up to around the 5 million token mark, this token is incredibly cheap and you can get so many of them and profit from the next people investing after you. So imagine what would happen if you bought at a tenth of a penny or a fifth of a penny or at a penny per token, but then it went to $1. That's 100x your investment. $100 becomes $10,000. But what if you put in $100 very early? Then it becomes $100,000. What if you invest $500 very early and it goes up to $1 or a little more? That's $500,000. So $500 invested when it's still a tenth of a penny in not so distant future. Obviously there are risks, but there is a light at the end of the tunnel for how the growth can happen. That $500 that you might invest at a tenth of a penny can become $500,000 when the token price reaches $1. Because to go from a tenth of a penny to $1 is 1,000x. Which brings me to the point that even though there is risk, you might just lose some money. Although it's nearly impossible to lose a lot because if you get in early, the price can't go below this price point of a tenth of a penny per token because that's the price at which it was launched, which is what the liquidity pool that was created allows. So the potential loss isn't that great, but if you can make a bet of 1 to 1,000 that's a good bet to make. So hopefully this visually illustrates the light at the end of the tunnel and how early investors can benefit from owning this token. So with that, of course, I welcome you to become an early investor and profit from the growth of this token.